Second quarter fixed sales and trading revenue, $5.6 billion. The estimate, $4.59 billion, slightly firmer than expected, Tom, though I should caution the range of estimates coming into this from analysts for many of these banks really, really wide. That's the fixed sales and trading revenue number. Here's the equity number. It comes in just a little bit lighter, Tom, on equity.
Yeah.
Equity sales and trading revenue, $770 million. The estimate, 930.1. Here's managing the message from the Citi CEO, Mr. Corbett. Overall business performance strong during the quarter. The balance sheet has plenty of capacity to serve clients. This is the continued message, Tom Keene, that the balance sheet is not an issue. This is an earnings issue for the time being. The balance sheet is still strong.
I'm going to look at the cost of credit, as they said. Every bank has different language, folks, of $7.9 billion. Maybe the math is 9 plus 9 plus 7, whatever that is, $20-some billion of cost of credit across the three banks this morning. And Citigroup, like JP Morgan, lifting a little bit, and Wells Fargo is its own story. Let's do this before we get to David Bianco and some good conversation on the broader market, and of course the China story John's really focused on as well. Sonali Basak joins us now, Wall Street correspondent. Sonali, we got Citigroup out here now, but I want to go back to Wells Fargo. How broken is Wells Fargo?
They just posted a $2.4 billion loss, Tom. That is a gigantic loss to post. And the dividend is being cut down to 10 cents. That was compared to 20-cent expectation, 21-cent expectation, and 51 cents is where it was before. So that should just tell you they're putting up a fraction of what they had before at a time where they're following JP Morgan with relatively stable, solid results, really in the face of a tough time.
Sonali, three banks, Wells, Citi, and JP Morgan as well. Is there a broad takeaway yet for all three?
It's tough because the broad takeaway is uncertainty. You don't know what's coming next yet. JP Morgan was able to show the consumer was all right. Even with people in forbearance periods, a lot of people were paying back their loans. And that was a good sign. Is the same true for Citigroup? I don't know.